James Hyerchuk with the Autochartist Forex weekly update for the week ending October 26th, 2012. We started out the week looking at the British pound US dollar. Earlier in the week there was a breakthrough support which looked like the market was going to follow through to the downside, but better than expected GDP data triggered a turnaround. You can see by the size of this candlestick, and this created a channel down chart pattern and had a very strong follow through to the upside. What we're looking at here is a big retracement of a downtrend. You can see this series of lower tops and lower bottoms indicates the trend is down. We saw a rally from 159.13 and that took us up to 161.43, but it did not penetrate any previous swing tops, so we're still looking at a downtrend. Now it is possible we could see an acceleration through this resistance line here that channels or that challenges the 161.78 price that we have here, and in that case that would change the trend to up. If we fail to get this follow through, then we're likely to pull back about 50 to 61.8% of this rally here, and that'll take us back to 160.28 to 160.01. So even though this was a spectacular rally last week, it did nothing to change the trend and could be setting up another shorting opportunity. After the British pound, we turned our focus on the New Zealand dollar. On the 240-minute chart, the New Zealand dollar showed the promise of a breakout to the upside. We are looking at possibility of a breakout through this 82.30 area and through the 82.42 area. We saw this failure here, so now we're looking at possibility of pullback to the downside. We could fall back to as low as 81.71 to 81.55 over the near term. That'll put it back in this retracement zone. So this is a descending triangle chart formation with a lot of room between support and resistance. This means that we could see a sideways trade for quite a while on this 240-minute chart before the market gets enough momentum to break out either through support or through resistance. So again, look for a pullback to about 81.71 to 81.55 over the near term, and if buyers do step in here, then we'll probably see another test of resistance. And finally, we ended the week looking at the Australian dollar. This was showing some promise on Thursday, and we thought we'd get a breakout to the upside here, but these two tops proved to be too strong. We saw a break back into a support zone, which we identified as 103.15 to 102.96, so the market stopped precisely in a retracement zone of this particular range, and we saw a retracement back up. Now going into Friday, this type of action here, this lower top compared to this top, indicates that we could be looking at some fresh selling pressure. So if we upgrade the chart and we look at Friday's action, we'll see a little bit clearer that we do have a secondary lower top forming versus this top, and we could see a rollover to the downside. So if this rally failed here, this emerging triangle chart pattern failed, then watch to see if this market accelerates to the downside through the 103.26 trend line. This has been James Hyerchuk with the Autochartist weekly recap for the Forex, futures, and indices markets for the week ending October 26th.